Hey everybody, this is John and welcome to the free video. So let's dive in here. Oh, that was going to be the NASDAQ futures, but apparently it is not. So let's bring up NQ. So one of the things here I've been watching with the NASDAQ futures is tech here is, if any sector is going to lead us back to, on a downward trip, it would be tech. But you can see what's happened here is that while we did get close to 3 average true range lengths away from the mean, which is always kind of a red flag, like, all right, that's a little bit too stretched. It's time for a normal pullback. You can see that the pullback here has been fairly small as these levels have just continued to consolidate, meaning that the NASDAQ has actually been fairly quiet. So we did touch the mean today. We held on to it, which does set us up for a potential bounce. And if that bounce is going to happen from here, we, of course, need to see stocks like Apple kind of get their act together. They've had a very, very tough time here. Stocks like Amazon, same thing. They've just been kind of sucking wind, so to speak, as they lead up into Thursday's earnings. On the other hand, stocks like AVGO have been holding up really, really well, and we've been utilizing moves back into this 1 ATR level away from the mean to add to our position with the idea that this thing can continue to work its way higher. And it's almost actually in a squeeze here. The Bollinger Bands are very, very, very close to potentially being in a squeeze. And then the other development here that I think has been very interesting is just crude oil. And crude oil here, while on a daily chart has a squeeze that's been fired, or on the lower time frames here, if we go and we look at a weekly chart, you can see that the weekly chart here has been kind of cruising along. But then when we step here and we look at a monthly chart, you can see there's a pretty decent squeeze setting up here. And obviously oil has been consolidating down here for a while, and if this squeeze can trigger to the upside, you can see the last squeeze here, this downside move, a move back to $60 would be conservative. And from there, looking at stocks like one of my favorites is EOG here, is to see if that can get something going. Okay, so aside from that, we've got a lot of interesting things in the earnings space. All right, so for earnings trades today, there's a couple of earnings trades that came out. Not a lot of earnings trades today. Obviously, there's going to be more later in the week. One of the key things I like to look at for earnings is to get a note if it's going to be, I guess you could say exciting, if I can spell, exciting, which can also be stressful, or if the trade is actually going to be boring. Okay, and boring can be good with earnings. So AKA, all the things that we look at for stocks like this is that this is what would be called exciting stressful. Okay, so you can see here it closed at $51.91, and after hours it pretty much it's kind of a semi-explosion, trading up $5.50, which is over the expected move. So any trades that anybody did with the idea that it would stay within the expected move are going to get thwarted at the open. Okay, now if you did bullish trades, great, but a lot of times with earnings, it's like, well, we're not sure which way it's going to go, so let's do something. Let's do something where it's an expected move kind of a trade. And obviously, if it's an expected move kind of a trade and it goes through it, you end up losing money on it. So one of the things that I always like to do is try to find situations where the odds of the stock having an expected move are actually very, very high. And so the stock that flagged the most with this was not Texas Instruments, AT&T. Okay, so AT&T, you can see, it's a monthly chart there. I was like, wow, it really went down a lot today. But if we look here at AT&T, it's been coming down right into the fire line into earnings. Okay, and so a lot of times, especially stable companies like this, all the hedge funds kind of know what's up, and they kind of price the earnings in before the earnings even come out, because they have very sophisticated data collection tools as well. And so when we see something like this, we want to trade on the same side of them and to say, you know what, based on the criteria that we went over in our Saturday class, this meets that criteria that the earnings are already priced in, so then we can take trades accordingly. So essentially, on something like this, what we're looking at is that the stock is going to stay well within its expected move. And so you can see we've got a window here of about, in this case, the way we've structured it, of about $2, where we can to make money on this thing by the end of the week, and of course a little bit narrower window where we could get max profit if this thing could close the week around $35. And so the idea with something like this is that when we see something, and it's a great opportunity when you see something that's got an expected move, in this case of 97 cents, but you can actually sell at the money straddles and iron condors for more than the expected move. You get a really, really nice advantage in something like this. Now you can see after hours it's down, but in this case it's down about 45 cents, which so far is well within the expected move, which means we trade on the same side as the market makers, and we don't make max profit on this, but we can make about a 35% return on the credit that we got, which in this kind of a case is great for just kind of cashing in on these moves where we're not looking for any excitement. So, and as a reminder, we were getting into the last chances to buy this class. This is simplertrading.com/quarters. The earnings class. This is the strategy class that we did on Saturday already. It's been recorded, but we start the live trading tomorrow, Wednesday the 25th. So our live trading sessions are the 25th, 31st, 1st, 7th, and 9th. And during each of these live trading sessions, we're going to review all the checklists that we created and reviewed in the strategy class and apply them in real time, including things like finding that trade on Microsoft that's actually worked 12 it's 12-0. It's worked every quarter for the last 3 years. Okay, it's a specific strategy on Microsoft, and also a checklist on how to figure out if a stock like AT&T is going to be something that's quiet and it's something that we can do a specific trade on that benefits from it being quiet, or if it's going to be something like AKAM that it is more prone for excitement and we can take advantage of that. And last but not least, and more importantly, one of my favorite ones is that if it beats earnings beat, but not not by enough, what happens is very deliberately it gaps up about a certain amount, a percentage, and it'll sit there for about 15 minutes and then it gets hammered. So it's an opportunity. First of all, they're sucking in the retail, right? And then they blow it out. But it's an opportunity for us, since we know that and we have the checklist from the Saturday class and what to look for, we can take advantage of those opportunities to make money after the fact as well. Anyway, a great class, simplertrading.com/quarters. You can still get the Saturday class with all that information. And if you want to join us for the live trading, you can do that as well. You guys have a fantastic evening, and we'll see you at the next update.